welcome back. You are back with us on Let's Have It Out. We'll continue. Melo, earlier on you were talking about, central bank policies, but I think let's just look across Argentina, Brazil, and Turkey. What has been the issues and how did these countries try to address those issues? Something that will become relevant for South Africa.
I mean, obviously, the issue that Turkey is trying to address there is that they had a sluggish economy, right? So they're trying to boost the economy. And then the methods that they've actually taken are what you'd call like maybe anti the Washington consensus IMF approach, right? So what they've done is they've increased money supply within the economy. And the particular approach that they've done to increasing money supply within the economy is by lowering interest rates and by also using extensive foreign borrowing, right? I mean, that has been largely successful in terms of heating up the economy. But then one of the consequences of that is that then you started having an asset bubble within the property and real estate sector, right? And then that obviously starts to impact the economy because it starts driving up inflation in terms of people now being able to monetize whatever money they're getting from that asset bubble. I think also in Argentina is very interesting because Argentina, they've, not recently, but in 2001, they also had like a default on their debt, right? Which obviously sent their currency spiraling out and created inflation and so on, right? So for me, the interesting thing about Argentina in that context is that they had around 2003 unemployment sitting around about 22.5%, right? I mean, that's very high, and they've managed to bring it down with, I think, Néstor Kirchner when he came in, like from 2003 to 2007. And one of the things that I find very interesting that I think was very relevant was the notion of import substitution that they did, right? So what they did is that they did import substitution where they started producing products locally, and then in addition to that, the banks also eased credit extension to those manufacturers in order to facilitate that local production, right?
I find it interesting when you say 22% unemployment rate is very high. I wonder what you would say for South Africa, which sits at about 27.2%. But let's just contextualize that and bring it closer to home. If some of the solutions that you saying these other countries have instituted in their economies have worked to a certain extent, can they work in South Africa, given that we are in a recession and jobs are being lost? Should the central bank be cutting rates? I think this is one of the calls that labor unions have been advocating for.
I mean, absolutely. What we need in South Africa, I think we need a combination of factors, right? I think just cutting rates or nominally increasing money supply within the economy, increasing credit extension isn't going to work, right? Because if you look at the actual credit data, if you increase money supply, it does not necessarily lead to an increased economic activity over the past couple of 10, 15 years if you look at the data, right? So what needs to happen is similar to the Argentina situation, right? Where you increase money supply, you cut rates, but then there's also programs in terms of manufacturing that governments identified that money is going to get channeled into, right? Otherwise, what happens is that you're just increasing money supply, and that money supply is going to end up becoming inflationary within the consumer sector in terms of CPI. What you want to do is you want to increase money supply, provide easy credit extension, but at the same time have that money being channeled into actual proper manufacturing and infrastructure.
Some would say the US increased money supply quite significantly and they never saw inflation and their economy is growing quite significantly. How would you respond to such people?
I mean, obviously, inflation, you've got to also recognize that the way we measure inflation is very limited, right? So nominally, when we talk about inflation, we tend to talk about CPI, and that measures food and household and maybe fuel prices also, right, if you're looking at headline inflation, right? But one thing that never gets included in there is asset price inflation, right? So some of the money that they're printing and they're increasing is going into the stock exchange and it's creating asset price inflation. But also where that money is also going is carry trade, right? Some of that money is going overseas now. And where you're seeing that inflation, you're seeing it in the emerging market currencies that are strengthening and making those countries uncompetitive, right? So it's not necessarily that the money supply is not creating inflation. The important thing is what are you using that money for?
Yeah, I think most of these solutions could be classified as the traditional Washington consensus solutions, which in our country, they don't seem to have been able to reduce the unemployment or to change the structure of the economy. Should we be thinking differently, whether be it monetary policy or industrialization, in order to make sure that more people are involved in the economy, they participate meaningfully?
I mean, absolutely. I mean, just to give that a bit of context, right? For me, one of the major problems that I have in the country, right? I think we have on the one side people saying that no, government must create employment, and then generally that tends to be these EPWP type
And we know
jobs.
Government doesn't create employment at all.
Yes, and even in that sense, like even if you talk about your SOEs, ESCOM and whatever, it leads to bloated SOEs. Even SABC now, they're cutting staff and so on, right? And then on the other extreme end, you get these people that say that, no, what's actually supposed to happen is that the private sector is supposed to be responsible for the economy. Government, all that they're supposed to do is build roads and infrastructure and so on, right? I disagree with both of these things, right? Because I think they actually do not work. We've tried both approaches, they do not work. During the Zuma years, we expanded the public sector. We've seen the economy hasn't gone and we haven't been able to absorb that many people. During the big years, to some extent, we tried the private sector guys. Let's give them market-friendly policies, as you guys like to call them, and then those haven't necessarily worked.
So both President Mbeki didn't work, President Zuma didn't work.
Yes.
What should be Mr. Ramaphosa be doing now in his administration?
So I think Mr. Ramaphosa also, the first thing he needs to break from his ideological blinkers, right? Because even him, if you listen to the way he talks, right, he talks about private sector doing this, right? So I think you need to come into the middle, right? And the middle is that government is supposed to create value chains, right? And those value chains need to have like markets into which they offload products into, right? And then those markets, you get those markets through bilateral trade, bilateral agreements with foreign countries, right? So a classic example, if you look at this China trip that President Ramaphosa took, for me, on many counts, I think that trip was actually a failure, right? Because what Ramaphosa was supposed to go there with, he's supposed to go with ideas of value chains that he's going to create in the economy, whether it be an energy value chain, whether it be an agriculture value chain, something new that doesn't exist there, right? And then go to China and say, China, listen here, these are the type of things that we want to create. Do you guys have a market capacity to be able to absorb and buy these things from us, right? On a bilateral trade, one-to-one with Xi Jinping, then Xi Jinping and him can agree. Then what should happen then is Cyril Ramaphosa is supposed to come back here and say, guys, this is what we're going to do. We're going to create this new value chain, right? And it's going to absorb so many millions of people, right? Not this approach that he's taking where he's just saying that, no, private sector must do it. Private sector is not going to do this thing. I can tell you now for free. Private sector is not going to solve this problem.
On that note, let's go out for an outbreak to pay the bills. We'll be back after this.